excited to have you here today from Crucible Ventures.
What will happen in the next few years, we're going to see behind the meter energy generation completely
100%.
explode. I think that'll probably get to around 30% of the data center capacity that's supplied by behind the meter energy. That being said, we do need to get out of our own way in a sense. I read this book recently called Breakneck, which essentially positions the US as a lawyer state and China as a engineering state. And what's fascinating about American industry is that we just have a lot of permitting and regulation, and
look at Europe, it's even worse.
Yes, we love to sue people in the US. And so I think with this administration, I think they're very open to all forms of power, which I think is great. We need to win this AI race against China. It's like kind of do or die. And I do think, there are delays right now because of interconnection, and that interconnection leads back to regulation and paperwork, right?
Yeah.
And so I think there are, some software solutions that might be able to alleviate that, but really it's going to have to come from the top.
Yeah.
And I think that there will be some loosening of regulations around deployment of behind the meter, especially with nuclear. We do have an investment in the nuclear supply chain. It's called Standard Nuclear. They domestically generate TRISO fuel for all of the nuclear SMR companies in the United States. If you essentially throw a dart at any nuclear reactor design, it's most likely that they can take Standard Nuclear TRISO fuel. We thought, better a risk-adjusted bet to bet on the fuel and not the car design itself. And so I think it will be a form of like net new generation of energy, right? More nuclear, more behind the meter, et cetera. But it's also going to be the model's getting more efficient and token compression continuing to occur. And then, I just think in terms of AI demand, we're so early. Like we haven't seen AI truly infiltrate the healthcare sector yet. We haven't seen it infiltrate education.
The physical world.
Yes, the physical world. I was literally just meeting with JP Morgan the other day, and they're not even allowed to use Cloud Code yet because they're still getting through some compliance loopholes. And so I think that, we really believe at Crucible that like token demand is kind of infinite still where we stand now. So I think there's a lot more innovation to come for sure.
Yeah, and maybe digging a little bit on the biggest bottleneck, and you mentioned it behind the meter, and I 100% agree, is the way to go. I also think that it will be more decentralized, like smaller micro data center versus the big ones because of inference. If you think about the energy mix of the future, and I think this is US and Europe is very different, but do you think also these AI companies are becoming power companies?
They are, very much so. And it's fascinating to see some business models invert themselves, right? We are doing a deal right now with a company called Calcor. They're based in Paris, and they looked at the Mistral model. Mistral obviously started as a sovereign model company in France. As soon as last summer, they were announcing Mistral Compute, which is their new power business. And so they are moving sort of down the stack, whereas this company, Calcor, would actually like to start as a power company and then become a model company and an inference company later on. And what's fascinating about their approach is that they're doing biomass with natural gas backup. And we did a lot of research on sort of French behind-the-meter policy. They're obviously very pro-nuclear. And I think that that's a market that's ripe for some new companies that are essentially trying to build more sovereign compute. And every country is sort of realizing that they need to get serious about their infrastructure and energy generation. And as a country, like, what are your sort of KPIs, right? Like, how can you play the AI game as best as you possibly can? And I think France has a very specific approach. The US has a very specific approach. China is absolutely killing us in terms of deployment of interconnection and amount of power assets that they've been able to generate. I mean, solar there has just gone on an absolute
It's like
tear.
it's very smart. Yeah.
So I think, we have a lot of catching up to do in the Western world for sure.
Yeah, and maybe also on this. Okay, we understand energy, the biggest bottleneck. We try to catch up. We have behind the meter. We see essentially AI companies are power companies, right?
Yes.
We have this 5-layer cake. If we talk about AI, energy at the bottom, then we have the foundational model.
Yes.
And then obviously, between that, also the chips, the foundational model, then the applications on the top. Where have you invested, and where also from a small fund? Because I think like obviously like for contrarian ventures, or in general how we saw it a lot in the market, obviously this foundation models is very hard to back as a small 100 million venture fund. And especially if you see they go more deep down the stack, they become utilities in a sense. Where are you most excited on the
for us, we're very much focused on just wherever there are durable leverage points in the supply chain, right? Like where are we seeing persistent sort of demand that's being unaddressed? And I think that what's been really...
And demand, if we talk about demand...
For compute.
Okay.
And we made a really early call in a business called Verse, VERS, that's focused on essentially building agentic orchestration for very large tech companies. And this was pre-Claude Code. This is pre a lot of these solutions coming out. And what they're doing is essentially for CPUs specifically, they're working on something called branching, which helps you get more out of the CPUs themselves. And so, we're seeing now...
So they orchestrate the compute, the clusters,
yes,
in order to make them more efficient for their clients.
Correct. Okay.
So
they spend less on their compute costs. And I think what is it's not a hot take now, it's very much consensus, is that the CPUs are now the bottleneck, right? And we've gone back from GPUs beating the bottleneck to CPUs, and CPUs are what run in your laptop over there,
and they're the bottleneck, and yet
because
of supply chain, China, right? Like
exactly. And
geopolitical, everything is getting so geopolitical.
Correct.
This is another like how do we navigate as investors in this geopolitical challenges we have, because the world gets so
exactly
political.
Yes, it really is. And that's why I feel like anything with the word onshoring attached to it gets funded very quickly. We're seeing a lot of these companies based in El Segundo starting everything in the machining and CNC machining space, to manufacture things like semiconductors, anything with steel in it for a data center. They're trying to onshore and bring back to the US. So I think, there's a lot of trends that are happening in that space for sure.
And so I can understand the orchestration. So you also, obviously you invested in power companies like the nuclear deal. Did you also look at new, more energy efficient chip design, and what do you think about it? A lot of what I looked a lot on is the inference market. Never have been that, and we saw the Grok acquisition recently by and we see there are more and more companies understand that GPU actually for the inference market is not working, right? So they look for new architecture. Is this something you also have looked at?
Yeah, so we looked at a lot of companies designing chips, and I think at least our view for at least the last few months is that it's very difficult to start a new chip company, right? Like you have to have the entire supply chain, right? It's if you're going to catch up to NVIDIA in terms of verticalization, like good luck. So I do think it's very difficult to build a new chip company in this market. That being said, you just saw the Google TPU news come out recently. So I do think that there could be a gap in the market, perhaps, for a more efficient chip, but we haven't yet seen a team that we want to back yet. But this is the sort of call to action for sure. We'd love to talk to them.
But I understand also that is the battle still out there to win for a small chip design company. The challenges are big. So energy opportunities. You look active. Chips. Question mark. Then you have obviously the orchestration you just mentioned. You have invested in this CPU orchestrator. What else? I think you have done that.
And a company called Alchemy that's focused on infrastructure as code as well. So
how does that work?
So essentially, Alchemy is a company focused on so TypeScript is obviously one of the languages that's highly used. So he's basically trying to replace Terraform. So Terraform is essentially another software tool that's been around for almost a decade. Infrastructure as code is a very difficult place to innovate because it's very focused on the developer community, and you need developers.
So it's really locked in.
Correct. Yeah. So it's quite hard to get people to switch when they build their entire architecture on a Terraform.
And so basically, at the moment, most is built on Terraform.
Yes.
Okay. And how's this changing because then obviously the other topic is that, which I'm sometimes a bit worried about, is, but people have different opinions, and I also don't know yet, but power concentration. And what I mean by that is, we see Anthropic, for example, in some form, but also OpenAI, they try to own the full stack, right?
Yes.
Like, this is what is going to. And
you also see folks like Coatue now, investors getting into the power acquisition game. We just saw this morning that Coatue is now buying land for data centers. So it's, everyone's moving into infrastructure.
Into everything. And also on the orchestration layer, if we think about, let's say, Claude Code, everybody, let's say, might be the winning horse. I don't want to say, but let's say, why would I still then use some form of orchestration if they basically own the whole stack part? Because they also work on optimization within the orchestration layers, right?
Yes, very much so. I think it's fascinating how quickly the market turned on OpenAI recently. And
it will turn again.
It will turn again, but if you spend any time on Twitter, it feels like, okay, it's over. Anthropic's won. Dario's a king. He's never leaving.
He's the king. He's it went, but from January to like 3 months, and
exactly. And it's funny because if you're as old as a year, I'm 33 almost. You do remember that very recently Anthropic said, we don't want to get into the power game. We're not making these crazy projections. We think OpenAI is very irresponsible. We don't need this much compute. And then they've completely flipped that on its head. So I think it'll be very interesting once OpenAI catches up, because they have been the most active in terms of signing those early PPA agreements. They have better relationships. They have more projects sort of scheduled. And so once they are able to get that compute online, it will be a very different game, and they'll be able to ship a lot more quickly.
To our beginning, to our topic, to our point at the beginning, right? Like, energy as a bottleneck in the long-term race, and they prepared the best, you think? Okay.
And it's fascinating. I mean, even with our cluster and the customer that we've secured and have been working with, they're literally telling us that there is no other capacity. They can't find it until 2027. Like, that's the answer that most people are getting.
And then you go up.
And we're also investors in a few companies that are focused on building compute futures and compute marketplaces. So we get a lot of data from them in terms of like what the reality is of capacity that's available. And it's fascinating. I mean, people are just going to all lengths to find what they need, right? And they're paying absurd prices. We're seeing $6 as high as $6 for B300s, and I think that what's fascinating is that again, we're just seeing the market move in such interesting ways, because we thought that GPUs especially would start coming down in price by now, and they're not. And now we're seeing H100s suddenly hoppers come up in price, because people are now having to move back to H100s because there's no B300s available. So I think it's a very fascinating market, and it's very ripe for disruption and trading tools to be used, especially with regard to creating net new financial tools. So launching futures market is something that we're really excited about. People want to lock in their prices up front.
Interesting. So the company you invested in is doing compute futures?
Yes.
You can buy?
Yes, it's called Orin Compute. They work with high-frequency trading shops. They're working with labs. They're working with all kinds of customers at the moment.
And so, interesting. And so basically, but they're able to buy, or they're just a marketplace matcher?
They're just a market maker, essentially.
It's a market maker. Okay, interesting. And I just mentioned it. Obviously, like Earth takes far too long. It's too complicated. Too much regulation. We go up to Mars, right? Like what you data centers in space is. I think every big AI company has a bet on it right now. What is your view on this? Like, what have you learned? Have you invested in this space so far?
Yeah, we have. So the main thesis there, and this is actually a thesis that I've been tracking since the Energized days, when I did a satellite deep dive, the cost of payload has just dramatically come down. If not even faster than the cost of solar, and used to be, $50 million to launch, a very small satellite into space. And now a similar sort of microcube-sat, it costs around $50 a kilogram, or I should say $200 a kilogram. And with that payload reduction, there is a lot more opportunity for cheaper cost to launch. And so with that trend in mind, we definitely believe that data centers will one day be in space. We made an investment in a company called StarPath. They make ultra lightweight solar panels for space, ultimately data centers in space, but they're near term, built in the US, built in El Segundo, California. And what's fascinating about them is that they're making all their revenue right now from telecom companies in the meantime before they ship to data center customers, although they do already have pre-orders from data center customers. And I think that in addition to payload costs coming down, we're also seeing a lot more companies focused on space O&M, operations and maintenance in space. And a lot of people have the misconception that space, it's so easy to run GPUs up there. It stays cool all on its own. It's actually not the case. It is cold up there, but there are solutions that are needed to sort of mitigate all kinds of degrading aspects of GPUs, not just the temperature. So I think it's a really fascinating area to be investing in right now. I just went to the Space Summit at the New York Stock Exchange this week, and it really feels like there are some really serious people in the room. There are people allocating to the trend. We just saw Star Cloud be valued at $2 billion. I think that's a little insane, but
they have already some NVIDIA.
They have like one chip on one satellite that's launched. Yes. Yeah. So I think it's obviously it's quite a frothy market. We completely recognize that, but if you look at this chart called the Data Center Moratorium, that I don't know who updates it, but it's great. And it basically shows you state by state, where data centers are facing some local and state opposition. And it's like the entire map now has some kind of issue. And I think that as we continue to see that play out, we are the lawyer state, as I mentioned. I think there will be no other choice to start really thinking about data centers in space and how that might work for some particular customers.
And what do you think is the timeline realistically until we...
Yeah, I think if I had to guess, like 2028.
So that's optimistic. I mean, we have to be optimistic.
Yes,
here, right?
Yes, we do.
And obviously you mentioned a cool cooling challenge
and
maintenance. What else is at the moment from an engineering point of view the biggest bottleneck?
Yeah, so...
inference, for example, I don't think it will work. Training, okay.
Yeah.
But bringing them up and down, I think inference is hard.
Yeah, it definitely is. I think for training, it will be appropriate.
And then what we need actually technically in the long run is inference, right?
Yes,
Training obviously will continue, but especially if we go in the physical world, that's why I'm a big better on these decentralized data centers.
Yes, edge compute is a huge theme. We're investors in a company called Reliability Engine. They're working on essentially a sensor that helps detect just using the liquid cooling fluid from GPUs. What they work on predictive maintenance as they test the fluid. And so they are actually one of the best use cases for edge devices, right? Like if you're operating a modular data center or you're running chips on energy devices in like the battlefield, for example. So they're working with Chariot Defense, which is one of the most successful companies right now that's working on edge power devices for military applications. And so they're working on essentially putting these sensors in some of their compute orchestration that they're running at the edge as well.
And so basically, just to understand,
and
so you put the sensors on some form of
on the cooling tower itself,
and then they
monitor the fluid, and they are able to test the fluid early before
it
sort of issues. Yep.
Okay.
Exactly.
Okay. Interesting. That's fascinating. I mean, you have an awesome portfolio. Okay, so I want to go back to a five-layer cake.
Yes.
So we talked a little bit about the energy.
Yeah.
You have done the nuclear deal. Some else in the energy space?
Not directly.
Hardware, I mean, like really power, I'm talking.
No, that's the only sort of power source we've
only
invested
power
in.
source you've invested in. And obviously you're a big believer in nuclear. And we see it. I mean, also in Germany, there are two companies who are very, very much performing. So I think like we are very optimistic on nuclear. Then obviously like on the chip, question mark, you have two companies in the orchestration layer and predictive maintenance, let's say, and this space. And then on the next layer, on the application, how do you look at this?
We haven't invested in any really application layer companies. I think those are probably the most ripe for not surviving sort of this AI boom, so to speak. I mean, you're even seeing now like these legal AI companies, right? There are probably a dozen of those. Yeah. I personally have run, some of our term sheets through just Claude, right?
Yeah.
And it gives me better answers than some of these AI companies.
Okay, interesting.
And
so you think like Claude is eating the application
I
layer?
absolutely think so. And I think there are many other examples of this in the market and in different verticals.
But this is to my point on the power concentration. I'm actually a little bit worried.
Yeah.
Because for us investors, it's a little bit tricky.
Oh, our jobs are harder than ever. I really think that it's harder than ever to...
Capital is like...
Yeah.
I don't even know what money means anymore.
Yes.
Like literally, like, is this the value is this the currency we are running on?
Yeah.
I wonder, like, I think what you're doing actually with your compute cluster is a very smart from learning perspective, but I feel like, I think energy is a bigger currency right now than financial money, financial capital.
Absolutely. No, I think it's easier than ever to build a company overnight. You can literally just vibe code your way into something that would probably get funded a few years ago.
And even not getting funded, but even making very quickly revenue without eating.
That too.
You don't need a lot of capital, right? Like there were these two guys, 20K on Claude or something, and whatever, like revenues in the billions.
It's crazy. No, and I do think that not many companies will survive. It will be, I think, at the end of this cycle, like a similar shakeout to the .com bubble. Like there will only be so many winners. And I think that if you're only focused on the application layer, you will not survive.
You have to diversify.
You have to diversify. And I think that, this is why we're quite focused on, obviously we did the infrastructure project, but we're also not afraid of hardware. I think that that's like a really important moat.
I 100% agree. And it's funny how quick that shifted, right?
Yes,
like I remember when I joined venture capital, 2022, people were still very skeptical about investing in hardware companies because software is eating the world, blah, blah, blah.
Yeah.
And it changed so quickly. And I think shows again to our job, right? Like you have to be very open-minded and we have to stay very open-minded, but it's very noisy, obviously, right now.
Yes, 100%. And I mean, we're most excited about sort of hardware co-design with software. If there's anything like that, we get really excited. I think that there's a big opportunity for BESS there as well.
For battery energy storage.
For battery energy storage. And
what do you mean? I mean, we have invested in Decade Energy in Paris.
Oh, I don't know them. Okay.
I mean, BESS in Germany, there was a big hype, 2020.
Yes. Oh, yeah, for sure.
2024 BESS deployment but it's a very quick saturation in the market.
Yeah.
And then you have some form of trading application or maintenance or whatever. But also the problem is, like in Germany at least, if you deploy BESS now, you have to go behind the meter because you don't get access to the grid anymore.
Right.
Obviously, combination with solar and so on, and you still can sell it as a financial asset to industrial clients.
Yeah.
But it's still infrastructure in some form.
Yeah.
Or how do you think about it?
Yeah.
I don't know the US market that well.
Yeah. So I think what's interesting is that, like, obviously still the cheapest form of power is solar plus battery, right? For data centers.
And it's beautiful.
It is beautiful. But most of them still need natural gas backup, obviously. But I do think that given that it's the cheapest, there are a lot of opportunities to manage BESS at scale for data centers. We have one portfolio company called Shatterdome that's focused on that. So they essentially create virtual power plants, aggregated portfolios of batteries, and trade them in sort of real time and ancillary markets. And
similar, we have similar companies in Germany.
I think we talked about one when we invested, but I think a lot of these developers don't have sort of in-house trading capabilities, and so there's a big opportunity for them to plug in and help these sort of larger asset owners manage all of their batteries at scale, especially as they're thinking about managing 300-400 megawatt data centers, and a lot of them aren't really energy people, so they have started to own BESS for the first time, right? These DCOs. And when in most cases they didn't need sort of backup power. And so I think he's sort of on a real trajectory here to start to capture most of the market, especially for those that aren't as familiar with sort of trading in energy markets in the US. Obviously, there are different places in the US that are easier than others. ERCOT is obviously less regulated, and it's easier to sort of trade and market make in markets like that. But yeah, we'll see how it evolves for sure.
Yeah, interesting. I mean, in the US with solar, we also have this tax on panels right now, right?
Yeah.
Which is a nightmare and doesn't really make sense.
Yeah.
Which is a huge bottleneck because
Yeah.
there's nothing cheaper than
Solar, yeah.
solar panels from China.
Yes.
It's the game, it's the play. I had one founder here last week. He was building power plants on gas, like more efficient gas turbines. And I think this is also something where OS is quite strong, right?
Yeah.
Like from the power construction. I don't know how big, like how do you think in the future the power market will look like?
Yeah, I mean, it's funny you mentioned turbines. We've talked to a number of companies that are building sort of turbine factories here in the U.S. I do think, obviously, it's going to be a highly capital intensive business, and you're competing with the GEs and the Siemens of the world. That being said, we're really bullish on sort of net new forms of power electronics for data centers. So NVIDIA is switching to a new power density. It's called 800V, and it's happening sort of right now. And it feels like the market only just woke up to it, even though they've been telling us this for a while. And it was actually a lecture I recently watched from Chase, founder of Crusoe, and he actually said, I'm very short sort of Schneider Electric, Eaton, because I do think they're going to get left behind. They haven't innovated in 100 years. Yeah. And they are about to be disrupted by a lot of engineers coming out of Stanford and various other UC Berkeley engineers that are working on really fascinating new power electronics that are going to be absolutely necessary for data centers to be able to manage their power draw. We've talked to a couple of those. We've talked to supercapacitor companies. We've talked to companies that are building new forms of transformers, and it's all made in the U.S., which is really exciting, and hopefully we see more of those.
Yeah, no, I actually think all these utilities, these big utilities, going to be disrupted because they are just too slow.
Yes,
if
they're
you
very
also
slow.
look at their tech stack and
It's just,
like it's insane, and probably we will have. It's awesome, right? Like I think we will have more different forms of smaller utilities.
Yeah.
Which comes naturally if we go more behind the meter. Everybody brings their own power and so on. Yeah. So it's probably a very fascinating mix.
I think power markets look incredibly different in the next 3 to 5 years. Yeah. It's incredible that in our power bills today, the fastest growing segment is transmission and distribution. It's actually not the supply side yet. But obviously prices are going up, but it's actually not the data center's fault yet. It's actually our aging infrastructure, the fact that we haven't upgraded
the grid.
A lot of it, the grid in many years, and there
crazy.
hasn't been. I mean, we say this internally a lot, but we think a lot of utility CEOs are about to lose their jobs just because of like pure poor risk management over time.
It's built for centralized systems.
Yes, it's not great. So I think the new markets will look quite different. I think that the data center and AI infrastructure build will do more for power and distribution in the U.S. than the IRA ever did. I think that like flooding the market with subsidies 100%. Was never the right call.
The one question I wanted to come back is on these foundational models, and obviously, like as your thesis a lot on energy as the bottleneck, we also have this new wave of smaller models, different models, more energy efficient, which we had with DeepSeek, obviously at the beginning. Yeah. And there's a structure which is changing. Is this something you have invested or looked at, and how do you think about that?
No, I think, as we were talking about earlier, I do think it's very difficult as a small fund to play that game. Yeah. So we'll let the big guys do that. Yeah. That being said, I do think we've made our bet on sovereign compute now, and I do think that there will be more. Or not? Yeah. So like with CalCore, I think that like obviously Mistral was first, but I think that they have a really good shot at being sort of a reverse business model. They're starting with power and they're moving sort of up the stack into a model company, an inference company. Yeah. And I think that can play out in various different markets. We actually have a portfolio company called Septiva based in Mexico City. That's sort of our sovereign compute play in Latin America.
So what do they build clusters?
Yeah,
It's like
so
a
they-
neo cloud, or
Yes, it's
okay.
almost like a mini neocloud down in Mexico City, and for them, like they
Why
get priced.
Mexico? So interesting.
Yeah, well, they get priced out of using, U.S. Companies in many cases, so they don't want to work with AWS,
cheaper.
or it's way cheaper to work with
Because of
sovereign
labor,
local companies.
energy, why it's cheaper?
Yeah, it's kind of all three.
Yeah. Interesting. Yeah.
But they're still buying their GPUs from NVIDIA, so it's like
That's
Yeah.
interesting.
Yeah.
I mean, in Europe, it's, I think, the sovereignty play. We looked at a lot of neo clouds, but we had the same, because you talked about the .com bubble, right? We had the same discussion in Europe. Obviously, do we, like in the internet phase, do we need our own cloud provider in Europe? And it didn't work, right?
Yeah.
So I think US is different than Europe, but I don't think that you can bet solely on sovereignty if you think about compute, right?
Yeah.
But
People are just going to use the cheapest.
It's a
people don't
it's a
realize-
commodity.
Yeah.
It's the cheapest.
Yeah. When you're running your chatbot or whatever you have, nobody cares what GPUs they're using, right? Or where it's coming from.
Yeah, I mean, there is this. I had this talk with one founder who builds a neo cloud in Sweden, and he had this argument about, yes, cheapest, but also most newest equipment, most best chips.
Interesting. Okay. Yeah.
Which I found, he said he has like special relationship with NVIDIA and get access to the newest chip design, which I do find interesting. I think we will see also a huge
Everyone has to kiss the ring.
Everybody has to kiss the ring. But I think we will see also a bigger disruption between chips. As I said before, I think we go away from this GPU dominance to more diversification. I think like I'm very bullish on neuromorphic design chips, for example, which is very interesting, just for their use cases, right? Like, because it will be more diversified. Like you mentioned before, like there's so many industries which haven't been disrupted, like the healthcare sector. There's so much to do. Biology is search function. So I think like there might be an opportunity to have like access to like platforms where you can get access to very specific chips.
Yeah.
Interesting. The last question I always ask my guests is, what do you build?
What do I build?
And with that, I feel like everybody is enabled to become a builder. Like, you told me a little bit like what you also, like how you integrate AI into Crucible, but also what are you building? Because everybody is enabled to build something right now. So this is my question.
That's a really interesting question. Okay. I think everyone's building stuff with Claude Code. And,
love it.
Look at my new app, look at my new interesting thing. No, I think it's actually really important to, at the moment, it sounds really silly, but just like personal relationships and in-person interactions are more important than ever.
That's also why I want to
exactly.
face-to-face.
Yeah, face-to-face is more important than ever. And I think it'll become more and more important to just focus on those IRL interactions and building community. People on the internet that are so worried about the future, worried about education, worried about our kids, right? And I think what's fantastic about AI is that it's going to allow us to spend less time behind computers, actually, and less time grinding through Excel models. And this is what I'm telling my younger brother right now. It's like he's so worried about his career trajectory. He's like, what the hell do I do now that everything can be vibe coded? I'm like, just focus on connection, and that's
I love this. I think focus on connection and always follow your passion.
Yes.
You will be always on the safe side if you follow your passion.
Yep.
No, that's a very nice
Thank
ending.
you so much.
To have more real life interactions.
Yes.
Thank you.